Hello traders, welcome back to my YouTube channel. Okay, today I want to explain some of the trade I took some days ago because someone requested I should explain the trades. Okay, so this trade I took this trade from $1 to $700. Okay, from $1 to $700. So I start Martingale doing rollover from $1 to $700. So some of the trade I screenshot, some of I didn't screenshot. So only the one with a 5 minute expiry time that I screenshot. Okay, there are some I didn't screenshot because it is 1 minute, and some I didn't remember to screenshot it after the trade have already closed. So in this video, I want to show you some of those trade I took that I use for my trading analysis in binary option. Okay, it's very simple. You might have noticed that some of the previous video I upload on my YouTube channel are based on SMC smart money concept. Okay, analyzing the charts, taking the trade from the 5 minute expiry time with 1 minute expiry with 1 minute candle. Okay, so here is the first trade I took. Okay, actually I've already taken some trade after this trade, but I decided to screenshot and explain more better on those trade. Okay, here's the first trade I took from $1. Okay, now if you notice what happened here, you can see that the we have the previous high. Okay, we have another previous high, then the market go down. You can see that before the price go down, it rise from this spot, from this support level or from this level, they rise to this high and they start dropping. Okay, now where should we enter the trade? You first, after you analyze the charts, because first thing first, you must analyze the charts, understand the market structure before you take any trade. Because if you don't understand the market structure, it will be not it will be difficult for you to predict the next market direction, or you might not uh, win the trade if you don't analyze the market structure properly. So the market structure here is that market rise from this spot, from this support level, and reach this high. Okay, and the price start to reverse to the downside and then rise again. So this reverse here is called the impulsive move, and then we have this corrective move. So from this corrective move, the price also creates order block. Okay, so this is the order block. The order block is located here. Then after this corrective move, the market drop again. Okay, then create another order block and drop. You can see the price drop. So now the next question is, where exactly is our entry level? Okay, if you want to enter the trade, the first thing you have to observe is this key level, order block. Okay, so if the market reach this order block, we expected the price to reverse. If the price reach this order block as well, we expected the price to reverse, right? But according to the price option, the market has already created what we call double top pattern, or let's say yes, double top pattern, because we have this top here. So double bottom pattern, the first bottom, second bottom. If you see a double bottom pattern, it indicates the market is going to rise. If you see a double top pattern, it indicates the price is going to drop. Okay, so that is what happened here. You can see this is the first bottom, second bottom. The market creates the double bottom pattern and then break the net line. So if the price break the net line, it indicates the price is going to go much higher. That is why I decided to look for a buy opportunity in this trade instead of sell opportunity. If I want to sell, I will sell from this level, from this zone here, okay, or I will sell from this zone. But I'm looking for a sell opportunity, a buy opportunity because of this double bottom pattern, which indicate the price is going to rise. So if I want to look for a double bottom pattern entry level, this is where I can actually enter the trade. Okay, I will enter the trade here. Okay, also this level here, the price creates first first high and then start to reverse. Okay, but unfortunately, no not enough sellers to push the price down. So that is why the buyers entered again on the next and then reverse for 1 minute candle and then continue to push higher. So if the price reverse for 1 minute candle, it has already created other block here. So that is why I look for a potential entry level. Okay, I look for a potential entry level for a buy opportunity. So also, if I notice that the market is not going to respect this other block, I'll be looking for next trade opportunity at this other block. Okay, which means that it's likely the market should break the previous other block, then continue to this one. Okay, then from here the market is going to rise again. But if I notice the market is not showing a sign of reversal at this other block, then I'll be looking for another entry level here. Okay, the neckline, because the price have already break the neckline. This candle break the neckline, so if the market should come down again to this level, I'll be looking for a reversal. But if the market still decided not to respect this level, this is the level I'll be looking for entry. Okay, I'll be looking for entry at any of this zone. If the market continue again to reach this level, I'll look for entry for 5 minute expire time, or to this level, I'll look for 5 minute expire time entry. Okay, but unfortunately, the market respect, because um, I can see a sign of reversal here. Okay, I can see a sign of reversal. This is the other block I'm talking about. I can see a sign of reversal, which is this candle. This candle shows a sign the market is going to reverse. If you see, let's say for example, you notice the price is approaching the zone and the market decided to reverse after touching the zone, reverse, but no sign of reversal, then still continue to push downward without breaking the zone. So it's a sign the market is going to reverse strongly to the upside. And that is exactly what happened here. If I see this kind of movement, I usually enter the trade with a strong belief the market is going to reverse to the upside. Okay, you can see this is the other block, that pushed the price upward. So when the market is reversing, it creates this instance, expecting the buyers to enter the market. But insteadly, the sellers, there's not enough buyers. Sellers push the price downward again. The buyers enter immediately. So when I see this kind of pattern and the market has not yet break the other block, it's still inside the zone. That is why I go with buyers with 5 minute expiry time. Okay, so the market went up for 5 minute expiry time. That is the first trade. Okay, here is the second trade. Okay, actually I didn't change the currency to the amount to 1.92. I still continue with $1, but I really make it to $700. So this is the same chart pattern. Okay, remember the first explanation I said earlier, that if I notice the market is not going to respect this other block, it's not going to respect this other block, it's either it respect this other block. But if it's not going to respect that other block, it's either respect this level or this level or this level. Okay, so this is the first movement the price creates, then reach this high and then respect the high again once more. The next one is that as the market reach this high, respect the high, then drop again. The price supposed to respect this, but no sign of reversal. I can see this red candle doesn't, it's not a sign of reversal. Okay, so it head toward to the next level, which I expect the price to reverse. Here, this previous support become resistance, and now it become a support. This is what I'm talking about. the previous support, it become resistance, okay, and now it's a support. So I wait for confirmation. I cannot just enter the trade without any confirmation. Okay, I wait for confirmation. I saw a rejection. I saw a weak seller's candle. Then I noticed the market is trying to form green candle, so I enter the trade at once. For the next 5 minutes, I expect the price to go up. So let's see what happened. Okay, the price did go up for the next 5 minutes. So I won the trade. So I increased the balance, my amount to 1.92. Okay, then this trade 1.92, this trade GBP JPY, GBP JPY. Okay, first you must analyze the market structure. That will help you to understand how you're going to enter the trade. Is it buy or sell? Okay, the reason why I always draw this line is to analyze the market structure for me to find out where I should enter the trade or where I should not enter the trade. Okay, that's why I always draw the line. Okay, sometimes I don't draw it, but I want to make sure that I make this video for you guys to see my analysis. That's why I draw the line. Okay, so I can see the market respect this level and drop. Again, it create another resistance and drop. Create another resistance and drop. Okay, then break. So the market has already break this resistance and has already break these two resistance. The market has already break these two resistance to the upside. So now, before the breakout occur, the price have already created what we call order block. The order block is sitting right here. The last red candle before this bullish movement. So the order block is here. So if this the price here did not respect the order block or did not touch the order block, which means that I will expect the next price movement come closer to the zone, wait for a confirmation. I expect the price to rise up in the next 5 minutes. Okay, so here the market almost touched the order block but failed and still reverse, and it has already break this high. So it's a continuation bullish pattern. It has already break this high. Okay, fail to fail to touch this order block, break the high, rise and break this high. So it's a sign the market is going to reverse. Okay, it's going to continue a bullish pattern. So if I want to trade the bullish trend, so I'll be using this order block as my entry level. If the price still fail to respect this order block, I'll use this order block again as my next entry level, or I will use this entry level. Okay, so which means that if the market fail here to respect, my next entry level will be here. I expect the price to rise, but if the price still fail, I expect the price to reverse here as well. Okay, that's why I always wait for confirmation. Don't trade if the market close inside the zone without any confirmation. Okay, there are two ways you can confirm your entry level, your entry trade. Two ways. Either you use the confirmation candlestick for the candlestick pattern as your confirmation, or you use the lower time frame for your confirmation. So if you want to use lower time frame for confirmation on 1 minute candle, I use 15 seconds as my confirmation on 1 minute candle. Okay, so the confirmation here is this Marbosu candle, this Marbosu green candle. So I expect the price to rise. Okay, actually I made a mistake. I took the trade for two entries. Okay, I took the trade for two entries, but the price still rise to the upper side. As you can see a bullish movement for the next 5 minutes. Okay, because it's respecting this order block. So expect this order block. This candle, this price movement did not touch the order block. It was this that touched the order block. That's why the price rise up. So this is what we call the liquidity. Okay, and that liquidity, there's another break of structure here. Okay, the break of structure, the market rise and break the structure. So now the other block is sitting right here. If the price fail to respect this other block, I expect the price to respect this other block. Okay. If I'm using the 15 seconds other block, 15 seconds other block can be seen around this area. Okay. Remember, last red candle before this bullish movement. So 15 seconds other block can be seen around this area. Okay. Or this as my entry level. Okay. So that is how I took the trade. That is my analysis on this trade. Then I took the next trade. Okay. I've already illustrated the the chart so that you understand. Okay. Around this area, I can see the base around this area. Okay. I can see the base around this area. The last green candle. This is the last green candle. Last green candle before this drop. Okay. Last green candle before this drop. And then here we have change of character. Okay. We have change of character. The CH change of character. So if I see this change of character, I'll be looking for entry around this zone or the extreme zone. So the market has changed character to the downside. Let's see what happened here. This is the first zone. I think the market did not respect the zone. It was the second touch here, because if I extend the zone to the right side, you notice that the price has touched the zone, the market dropped down. Well, I've already missed the opportunity here. Market make the second attempt, only few sellers entry, and again some few sellers movement. Okay, third attempt, only few sellers movement. So when I see this consolidation here, that means that the market is creating what we call uh, resistance. Okay, resistance, which is the liquidity. A lot of traders might have entered trade here. Immediately this candle rise to this point, a lot of traders might have entered the trade to start selling the market. But as SMC trader, you should know that you should not you should know that this is not where you should enter the trade. Okay, the next level you can enter trade is around this zone, this other block. Okay, so what I need is confirmation for that other block. So I need a confirmation from the other block. If I didn't send any confirmation, I don't enter the trade. That is my trading rule. Okay, so this is the confirmation. Okay, what do you see here? What do you see? As the price is approaching the other block zone, we have a rejection from the sellers. And this candle is called what? A shooting star candle. Okay, this candle is called a shooting star candle. Immediately I noticed this shooting star candle, it gave me a signal, a sign that the market is going to drop. So that is why I entered a sell trade on the next movement. So you can see the price drop rapidly. Okay, you can see the price drop. So even though you entered with you can see the price drop rapidly to the downside. Okay, so without the illustration, let me explain this chart. Okay, without the line I draw in the previous screenshots, let me explain. The other block is here because that's the last red green candle before the movement. This is the last green candle before the movement. This market failed to reach this level, so we call that the inducement. Okay, inducement. It is induce the trader to enter the trade. We call it inducement. And when the price creates the inducement, it drop, creates a new low, and drop again. So we notice that the price break all the lows here. Break this low, okay, also break this low. So if the price break the low, is a sign of change of character. Okay, it's a sign of change of character. And immediately price continue to rise up again. The inducement is sitting right here. The market also, the inducement also has another block, other block. And that is the other block here. Okay, the last green candle before this bullish jump. Okay, so here, this is the next internal IDN, that is inducement, because the market failed to reach the zone, this other block, and still drop, okay, and break previous low. Okay, this also, the market also failed to reach the other block, that is liquidity, and drop. But this candle touched the other block, a sign of reversal, and still drop. So I've already missed this trade opportunity. So when I miss this trade opportunity, I'll be looking for trade entries at the extreme supply zone. Okay, this is where I'll be looking for trade entries. I will not be looking for trade entries at the next attempt. No, always trade first attempt. Remember, always trade the first attempt. Okay, this is the first attempt from the zone. You can see the second attempt doesn't work. If the market again rise to this level at the second attempt, I won't take the trade because it's not going to work. Okay, so always take the first attempt. So that's my strain level. So as the market has violated this or did not respect the other block here, so it creates what we call liquidity. The price sweep the liquidity, touch the other block, a sign of reversal occur. So I entered the trade in 5 minutes expire time, and the market went down as the way I predicted. Okay, so on to the next trade, which is right here. Okay, though I couldn't screenshot the whole chart, but if you want to know how this chart look like, this is how it look like. Okay, this is how the chart look like. The whole chart here, this is how it look like, because it seems to be the price is dropping to the downside, create the support. Okay, then accumulation occurred here. Accumulation occurred here. The price break out from the accumulation. Price break out from the accumulation range, create another support for a while, and then drop. So now we have this break of structure, the downside, because it's a continuation trend. Okay, there is difference between break of structure, BOS, and change of character, CHOOCH. Okay, there's difference. You see this break of structure here. Whenever it occurs, it means that the market is continue moving higher or downward. For instance, if the price is moving upward, this is how it looks like, right? Okay, so where are the break of structure? These are the break of structure. Break of structure. So if the market drop again and break this structure, this is the break of structure. BOIs is a trend continuation structure. Okay, the price continue to break the previous high, continue to break the previous high, continue to break it. So that is the definition of the break of structure. Okay, but if the market decided to drop down and break this low, don't say it is break of structure. It's not a break of structure. Change of character. Change of character is a sign the market, because the price is rising to the upper side, and now the price have break this low. Okay, it has break this low. So now the price has changed the character from uptrend to downtrend. So change of character. So change of character is always around this area. Okay, change of character is always around this level, because it changed character from uptrend to downtrend. Same thing goes to the downtrend as well. If you see the market is moving down, something like this. Okay, here we have the previous low. So the price break the previous low, that is break of structure. It's a continuation of trend, break of structure, continuation of trend. But if the market rise, price supposed to reverse at any of this level. But if the price rise and break this high, it's now change of character, because the price change character from downtrend to uptrend. So at any instances, the market might visit any of these key levels to reverse to the upper side. So that is the difference between change of character. So you can see that this is not change of character, it's also break consumption, because you can see the previous trend is down of accumulation, the market break this low and continue to move downward. Okay, so now where is my confirmation? Where is my entry of confirmation? Okay, I'll be looking for trade opportunity around here or here or here. That is why I'll be looking for trade opportunity. Okay, so if I see the price reach the previous or the first order block and show a sign of reversal, I will enter the trade. Or if there's no sign of reversal, continue to next level, I will also enter the trade. Or no sign of reversal, continue to the major or extreme level, I will also enter the trade. But the price did not break this previous high. Okay, I can see a sign of reversal. Evening star pattern. Okay, evening star pattern is something like this. You see a bullish candle with a doji candle. Okay, a doji candle can be a doji candle. It can also be a spinning top candle or a shooting star candle. But if you see a doji candlestick here and the next candle is red, that's a sign the market is going to drop the downside. So this pattern is called the evening star pattern. The evening star pattern. Okay. The pattern can also have a shooting star candle here or a spinning top candle. Okay. But in this case, it's a doji candlestick. I see a doji candlestick. So I enter the trade. Immediately the next candle formed. So I think I won the trade. Yes, I think I won the trade. So the price went down for the next 5 minutes. Okay. And I think it went down to this level. Okay. Even though you enter for 10 minutes as 5 times, the price still went down to this level. The next trade is this. Okay. So the first thing you have to do is analyze the chart. Analyze the chart. Once you analyze the chart, you will know where the market is heading to. Okay. So here you can see the market is creating resistance here and then drop. Fail to touch the resistance and still drop. But this low, this level, the price did not reach this previous low. Okay. But it's a sign the price is rising up. Okay. A bullish trend. When you see the market moving like this is a bullish trend. So when I see this bullish trend, okay, the price failed to reach this low and then create this high. Okay. And the price break the high to the upside. Before it break the high, it has already created other block here. Okay, you break the high and has already created other block. Break the high, reach this level. Okay, so which means that I'll be looking for entry at the other block around this area. But if the price fail to respect this, I'll be looking for entry around this area as well. If price fail to respect this zone, I'll be looking for entry around this area or 15 seconds other block around this area. So which means that it's a sign the market did not respect this. I'll be looking for another entry here to reverse to the upside. But if there's no sign of reversal, I'll be looking for another entry here, reverse to upside, or looking for another entry here, reverse to upside. So that is why I have to wait for candle to form a pattern to occur before I enter the trade. You can see the pattern has already occurred here. What is the pattern here? This is the pattern. Okay. After this is the other block I'm talking about. Okay. After this candle touch the other block, we see a bullish sign of entry. Okay, that's not okay for me to enter the trade, but I can still enter the trade when I see the bullish sign of entry. But I have to see any confirmation to give me a sign the market is going to reverse, which is a completion of morning star pattern. Okay, this morning star pattern is something like this: red candle, then a bullish candle here, something like this, followed by a bullish candle here. Okay, so I think this is a morning star pattern. So I'll be looking for trade opportunity in the next candle. Okay, I expect the price to rise. Okay, though the price still continue to push higher, but still consolidate for a while, mitigate the next order block, and then start still rise again. But I won this trade. I, I almost lost this trade, but I still won. Okay, because my entry was right here, the closing of this candle. So after the closing of this candle, count five candles upward. This is the first candle, second candle, third candle, fourth candle, then fifth candle. So this is my entry here. My entry is here, and this candle goes here. You can see that I almost lost the trade, but still the price rise up. Okay, the price still goes up. Okay, because of this zone. Here is another trade here. Okay, I have to wait for confirmation on this trade. Okay, because I can see a bullish movement. Okay, when I say bullish movement, I mean upside movement. Okay, because we have this, you can see impulsive correction, impulsive correction, impulsive correction, accumulation here, then impulsive, and then correction. Okay, so if the market make a correction, I'll be looking for trade opportunities. Okay, my trade opportunities is can be this other block or this fair value gap. Okay, or this previous resistance to become a support. That will be my trade opportunities entry level. But I don't trust, this is SMC trading pattern. So I don't trust price action to be trading previous support to become resistance or previous resistance to become support. That is why I did not enter the trade here. If I enter the trade here, I will fail because you see the market still go down in the next 5 minutes. Okay, because this is previous resistance that will become support. So if I enter for 5 minute expiry time, I might fail this trade. Okay, I will fail this trade because since the market did not go up but still continue. That's why I don't trust price action pattern. I trust SMC pattern than price action. So SMC pattern, I'm looking for the entry level, the fair value gap, or the other block. The fair value gap here, if I see any sign of reversal, I will enter the trade. The other block here, if I see any sign of reversal, I will enter the trade. Let's see what happens next. I've already analyzed the price is going to reverse at this fair value gap. Let's see where the market did not respect the fair value gap like the way I want it to respect. Because after the price create this resistance, my fair value gap is something like this. Okay, but you notice that the market did not respect the fair value gap. So I wait for some minutes. I wait for some minutes to see if I can see any confirmation for entry because I'm rolling over the amount. Okay, so I wait for some minutes. I didn't see any fair value. I didn't see any confirmation. Okay, that is why I keep waiting. That okay, the market is actually going to respect this other block. But when I saw this candle has already touched the other, almost touched the other block and reverse to the upside, then I noticed that the market is going to create a double bottom. before it reverses to the upside, which indicates that the double bottom only occurred because of this resistance. Okay, because of this resistance. Okay, this R1, R2. So the market has failed this previous R1, R2, R3, R4, failed to rise to the upside, then continue. So this next one, this R1, R2 before the other block, I expect the price to reverse from there. So that is why I do not. I expect the price to reverse from here, but I did not wait for. I did not enter the trade. I have to wait for the next candle to form. The next candle form, the next direction form. So when I see a confirmation here, that's when I enter the trade. I see confirmation. I see confirmation with this candle. Okay, two signs of reversal. When I see these two signs of reversal, I expect the price to rise up. Okay, because it created the first block, the first bottom, second bottom, R1, R2. The other block is here. If the market is not going to reverse, okay, meaning if I'm going to enter trade at this other block, it means that the market is not going to respect this level. It will continue to push downside and reverse. That was my expectation. I was hoping the market should move like that. But unfortunately, when I saw confirmation candle, these two confirmation candles, so that is why I hope the price should rise up. So I entered with 25 minute expiry time. Okay, I think I won the trade. So let's see the next trade here. Okay, this is the next trade. So always follow the bullish pattern. This is one of my favorite uh, pattern, trade pattern. Okay, this is one of my favorite trade pattern. I use this favorite trade pattern mostly in forex and mostly in binary option if I'm trading the 5 minute expiry time. And this pattern is called the flag limit pattern. What I mean by flag limit, I'm talking about a bullish or bearish continuation pattern. Okay, for instance, the market is creating a flag hole, consolidation occurred, okay, and rise after breaking this previous resistance. Okay, the market is supposed to reverse from this previous resistance to become support, but instead it make use of this other block around this area. Okay, and it continue to push downward, then reverse. So which means that my entry level should be around this area, not here. Okay, not here, but here. So this pattern is called the flag limit pattern. Okay, and that's exactly what happened here, the flag limit pattern. So I enter the call option here. I enter a call option based on this flag limit pattern. After a bullish movement, then the market has break this the previous high. Okay, so my other block is here or here. Okay, or here. But according to this structure, the market has already created the reversal pattern at the support level. This is the support. The market has already created a reversal pattern because this, what I mean by reversal pattern, I'm talking about head and shoulder, inverse head and shoulder pattern. You see, inverse head and shoulder pattern is a sign of reversal pattern. Okay, this is the first shoulder, the head, the second shoulder. Okay, and the market continue push higher. So it's a sign that this is a bullish trend. Okay, this is a bullish trade. So I'll be looking for a bullish trade opportunity. So if I want to enter the trade, a bullish trade opportunity, I'll enter the trade here. Or if the market decided to drop, I'll enter the trade here or here. I'll be looking for a bullish trade opportunity. Okay, so I'm not looking for bearish trade opportunity. Instead, I'm looking for a bullish trade opportunity. That is why I go with buyers here. And let's see what happened. You can see the price rise up in the next 5 minutes. Okay, I think this is the trade. Though I took some trade on 1 minute expiry time, I did not screenshot it. So I took a trade from $1 to $700. Okay, from $1 to $700. Those some of the trade I did not screenshot it. It was this, the one I did screenshot is one that I remember. So I keep trading. I did not do any explanation. I keep on trading. Okay, although it took me hours to reach the goal of $700. It took me hours. Okay, so start from $1, continue like that, look for a trade opportunity, analyze, continue to analyze, then execute the trade. So it took me hours to complete the $700. Okay, so though I still took some trade. Okay, I took some trade. I remember I took some trade. Okay, I took some trade on 5 minutes. Okay, this is also a bullish pattern. Remember, if you see a bullish pattern, always trade bullish entry. Okay, this is also a bullish pattern. We have the left shoulder, the head, and the right shoulder. So it's a bullish pattern. So I'm looking for a trade opportunity for a bullish trend. Okay, I'm looking for a trade opportunity. The reason why I go with buyers was because of this previous level here. Okay, after the market has calculated this liquidity, so I'm looking for an entry level here, and I enter with trade 5 minutes pattern. So I waited for confirmation. The confirmation was this bullish engulfing. Okay, bullish engulfing pattern. So I enter with 5 minute trade expiry time. I think this is the last trade here. So what I want to say is that always analyze the market before you enter a trade. Always analyze the market before you enter the trade. Because analysis is what will make you to understand price movement. Okay, price movement. Also make use of the SMC trading pattern. So for those of you who want to learn about SMC trading pattern or trading analysis or SMC tricks in trading, forex or binary, well, if you need a full complete course on that, just let me know. Check my uh, details, contact details in the video description below. Okay, you need a full course on SMC trading tricks in binary. Just check my contact details in the video description below. Okay, so you can see it's very easy. You can make profit. You can even make a stable income. Okay, maybe like $10 daily or $20 daily or $50 daily using this trading strategy. Okay, see you guys in my next video. And if you like this video, please like, share, and subscribe. Thank you.